Hey everybody, welcome to Trading Capital Analysis. Today's video we're discussing the energy market, natural gas and oil, and some of the potential trading opportunities. Alright, first things first, Nat Gas, congratulations if you caught this move. Our members today banked a beautiful 17% off the top of my head on Boyle here. Just take a look at this impeccable move. We banked just over 17% gain on the overall trade there. So full disclosure, I am now out of the natural gas trade at this point in time, but let's discuss the price action. The overall price action is getting a little bit parabolic in the daily. Could it go higher? It absolutely could. One of the reasons it could go higher is due to the overall short squeeze interest. The overall shorts in this market is pretty fierce, and these commodities do have a tendency to overshoot just due to the overall size of the market and how it is traded as a commodity. Obviously, you're going to need to continue to have the reports, the building or the builds of the natural gas supply in your favor if you want the price action. But it seems that the market is now looking at a stage 2. This is the stage 1 basing. It is now broken out of stage 1. It's into stage 2. Stage 2 is where you get some pretty big moves to the upside, but often a lot of chop and slop inside of this price action. So I expect us to be range bound up until we hit this 358. One of the reasons why, actually, I'll show you the trend line that I think we're going to hit. If you take a parallel channel and draw it through your three main lows, okay? Your three main lows. And I'm just going to butcher this a little bit and turn it like that. This is one of the reasons why I think we're almost at this near-term resistance. If you take the three lows, your pivot high, look what you're coming up into. You're coming up into this key $350 zone over here, and notice the cluster of volume. That's where you had your epic breakdown. On a weekly chart, you actually busted through the weekly 50, but as long as you're stuck now coming into these pivot zones, and you can even call that 349 to about 358, that's going to be a mega wall of resistance. You know, this pivot over here that caused Nat Gas to bounce to its all-time highs is going to be a big level of sellers, in my opinion. I think a lot of people that started buying in over here expecting the big bounce are now finally break even and going to sell some of their positions. Now, since we have broken out of the stage 1, I am more bullish on Nat Gas as we get those pullbacks. I would love to continue to load up Nat Gas on the long side, so definitely if you're interested in how I'm playing it, visit tradingcapital.ca, because I do think that, you know, there's some key pullbacks that need to happen along the way, but I do think that ultimately this gap fill at 439 is going to be a pretty big level that it does eventually head to. So if you're a long-term investor, probably just buckle up and ride. Not financial advice, but overall there's a lot of swing trading and in and out opportunities that can be made. You look at some of the stocks today, obviously it was a strong market. You look at AR, a natural gas stock, getting absolutely the beautiful bounce. And what's interesting is you look at this type of consolidation. This is bullish consolidation. You have a double bottom off of a flag structure. This is a bull flag pattern. You know, you simply do a measurement 2 of the Fibonacci tool, and you measure your flag down at the double bottom. This is showing structure move all the way up to 33.37 on the chart. So obviously, if Nat Gas continues, you want to see these stocks fly to the upside. And keep in mind, this stock is obviously influenced by the overall energy sector. What happened to the energy sector over the last recent sessions? If you look at the XLE, you know, the XLE is in this pretty big sell-off. A hard failed breakout pattern has occurred, and you basically look at some of the natural gas stocks like AR holding up pretty well to the upside. EQT is another one that is an energy stock that is well above the highs of its peers because it has that Nat Gas exposure. So you want to see some continued strength, and obviously one of the long-term patterns that I'm looking at as to why I'm so bullish on Nat Gas. Okay, EQT is a very heavily dominated natural gas stock. And if you look at this pattern, this is, what type of pattern is this? So you have this left shoulder, you have your head, you have your right shoulder development. Look at that neckline. Imagine you get a break in this. This pattern, you know, is from 28 bucks to 45. That's almost a $17 move. You know, you're looking at a pretty big potential move up in EQT if this is to continue. You know, you could potentially make a move all the way up to 62 bucks, and that's showing that Nat Gas is likely going to continue to move higher. So It's good to see some of the underlying commodity stocks start to pick up and gain momentum as it's breaking out to the upside. Now, one stock that I think is coming up into some decent support, XOM, got a pretty big bounce today. Basically, you are hitting this long-term trend line of support. It's a weekly trend line. I'm going to show you, erase some of these other key elements here. But basically, you hit this major pivot, major pivot, major pivot, major pivot. You tag that level today on XOM. I actually day traded this individually. You can see my 105.75 entry intraday. It was very, very choppy and sloppy, and basically we caught that whole little bit of a breakout. But overall daily chart of XOM getting oversold. You are at some pretty important technical support here. You need to hold this. But as long as you stay underneath this range and in this bear gap, there's always a chance that you could start to put bearish consolidation under the daily 200, which could make another move lower. Obviously, oil is going to be the big decider of what it does. So let's analyze that chart. Overall nasty pullback in oil. You are hitting some support as seen by the temporary bounce today. One thing I'm going to pay attention to as a trader is this trend line. Okay, this pivot to this pivot is now your resistance. Anything under here, consolidation in a sideways pattern, is bearish. If you get above that, I could see at least a double top retest. So risk is basically this low chop over here with a stop loss below this, and then reward, if you get a daily close, you could see a potential move to the high side. So you really need to see this resistance flip back into support in order for a stable trend to prevail. But again, you know, there's a lot of patterns that could develop, and you could see a move all the way back up, right back down to the true breakout zone. So often there's this initial hard sell-off, consolidation, and then a measured move down. And if you just so simply take, you know, this pattern over here, this low to this high, or sorry, that high to that low, and you draw it down from where your trend is, you could see maybe a pierce of this area down here in oil is to come in the coming days. I mean, we don't know how long that's going to take. You know, it could be a simple retest, and we could see a trickle down, you know, all the way to 73. But there's a lot of different scenarios that could play out here for oil. But anything in here is technically bearish consolidation until you get that daily close above this key area. So pay attention to that for oil. On that note, I'm going to end this video here. Thank you all for tuning in. Definitely, if you're looking for energy trade setups, we trade the commodity markets pretty frequently as it is such an important driver, especially as of late, even with bond yields and basically the overall strength in the dollar, what's occurring, because we're dealing with inflation. And oil and energy costs are going to only exacerbate inflation or lower inflation, whether they're in an uptrend or a downtrend. And since we're in a fight right now for inflation, this next print in the CPI could potentially be 3 higher monthly prints. They often say on Wall Street 3 months is a trend, so it is going to be imperative for the deflation, you know, experts, callers, and talking heads to prevail, and it's also going to be imperative for the inflationary bulls to prevail. But one way or another, we'll find out certainly as we progress through